Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that's less of a bombshell and more of a whoops, we forgot to attach the paperwork situation. Get ready for some minor corrections and a whole lot of nothing to see here, folks. Alright, let's get straight to it. VolitionRx Limited filed this document, which is basically an update to a previous report. Think of it like sending a corrected essay after you realize you left out a couple of paragraphs. The original report filed back in August 2025 was for the period ending June 30, 2025, was for the period ending June 30, 2025, was for the period ending June 30, 2025. This amended report is just to add two missing exhibits, specifically numbered 5.1 and 10.10.2. They were apparently left out by accident. The company's ticker symbol you might recognize is VNRX. They are registered in Delaware and their main operations seem to be focused across several locations. This filing is important because it tells us what the company is doing and how it's managing its business in a very specific period, which is the second financial quarter of 2025. It's their regular check-in with the investors and the public. A key detail for investors is that as of August 7, 2025, VolitionRx had over 107 million shares of common stock issued and outstanding. This is the total number of shares that people can buy and sell on the stock market. So the big reason for this filing is just filling in some blanks. They missed a couple of legal documents, likely opinions from lawyers, and perhaps details about certain agreements. It's like finding a missing page in a contract. They are not changing any financial numbers or adding any new significant business information in this particular amendment. It's all about making the original filing complete. One of the missing documents, Exhibit 5.1, is a legal opinion from a law firm called Stradling, Yocker, Carlson and Rolf LLT. This is pretty standard for companies, especially when they're dealing with new stock offerings or significant agreements. It's basically the lawyers saying, yep, everything looks legal and in order with this specific part of the company's business. Scroll Amendment Novu 1 to Capital on Demand Scroll. Then there's Exhibit 10.2. This is an amendment to a Capital on Demand sales agreement with Jones Trading Institutional Services LLC, dated August 14, 2025. This agreement likely relates to how the company can sell its shares to raise money, and this amendment is just making sure that specific document is properly included in the filing. Since it's dated right around when the original 10Q was filed, it's highly likely this amendment was prepared at the same time and just got filed incorrectly. Looking at the other exhibits listed in the original filing gives us some context about what VolitionRx was up to during this period. For example, there are details about a securities purchase agreement with Lind Global Asset Management Wealth LLC, dated May 15, 2025, along with forms of convertible promissory notes and stock purchase warrants. This suggests the company was actively raising capital through debt and equity instruments. During the first half of 2025, they also have several security agreements and pledge agreements in place with this same entity, which indicates they are using assets to secure these financial arrangements. And as is standard for these kinds of filings, we also see certifications from the Chief Executive Officer and Chief Financial Officer. These are statements confirming that the information in the report is accurate and that the company has effective internal controls over financial reporting. Even though this amendment is just adding exhibits, they still need to provide updated certifications. It's a way to ensure accountability at the highest levels of the company. Overall, this filing is a minor administrative correction. It doesn't reveal any new financial performance or strategic shifts. The actual financial meat of the quarter would have been in the original Form 10Q filed in August. This is just a cleanup job. However, the surrounding context from the referenced exhibits does show that VolitionRx was actively engaged in capital raising activities around May and August of 2025, likely to fund its operations and growth initiatives. Now let's think about what this all means for VolitionRx. The fact that they had to file an amendment to include basic exhibits suggests some internal process hiccups. While not a sign of major financial distress, it does raise questions about the thoroughness of their reporting procedures. From a high-level view, the company appears to be in a phase of growth and capital acquisition, which is typical for biotech or diagnostic companies like VolitionRx. They are raising funds through agreements that involve complex financial instruments like convertible notes and warrants. This strategy can be effective for growth, but also carries inherent risks such as diluting existing shareholders' ownership if warrants are exercised or convertible notes aren't on diagnostic companies like VolitionRx. They are raising funds through agreements that involve complex financial instruments like convertible notes and warrants. This strategy can be effective for growth but also carries inherent risks, such as diluting existing shareholders' ownership if warrants are exercised or convertible notes are converted into stock. The key risks for a company like VolitionRx often lie in the successful development and commercialization of its diagnostic tests. If their technology doesn't gain market traction or face significant regulatory hurdles, the capital they've raised might not be enough to sustain operations. Competitors in the diagnostic space are also a significant factor. And VolitionRx its offerings aim to differentiate itself and prove the clinical and commercial value of its offerings. In conclusion, this amendment is a minor administrative detail rather than a reflection of the company's financial health or strategic direction for the quarter itself. It highlights a need for tighter internal controls in their filing processes. The underlying financial activities hinted at by the referenced exhibits show a company actively seeking funding to fuel its development. Investors should refer to the original Form 10Q for the actual financial performance and delve deeper into the terms of these capital raising agreements to understand the potential impact on shareholder value. Alright, that's our quick look at this amended filing. What are your thoughts on these types of corrections and the capital raising activities of VolitionRx? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community for more discussions and insights. The link is in the description. Thanks for watching,